What's up, everybody? Mr. Zero to Infinity says hello. In this episode, I'll be discussing a new stock I bought in my Zero to Infinity stock portfolio. I'll end with a portfolio update. Before we get started, remember, I'm not a financial advisor and this is not investment advice. Always do your own research when buying stocks. So if you follow me on Twitter, aka X, you already know the new stock I bought is called Sow Good Inc. Sow Good is a freeze-dried candy and snack manufacturer providing customers with innovative freeze-dried treats. The company sells its treats at over 5,800 retail doors. Key partners include Five Below, all 1,550 stores, Target, 1,859 stores by June, Circle K, which is 2,000 stores, and Cracker Barrel. Plus, there are pending launches in Party City, Kroger, 7-Eleven, Dollar General, and Hobby Lobby with a late Q1 launch at Kroger. Sow Good sells its treats using an omni-channel strategy primarily focused on the wholesale and retail channels with less than 2% of sales coming from e-commerce as of December 31st, 2023. Sow Good has continued to outpace initial sales expectations in each of their retail launches. Customers are increasing their order quantities, expanding their SKU portfolio, and working closely with Sow Good to develop new and seasonal treats. Demand has been so high that Sow Good had to pause onboarding new customers in Q3 through Q1 2024 due to capacity limitations. The company currently has 4 in-house freeze dryers and expects to have 2 more freeze dryers by Q3 of this year. The biggest differentiator from competitors is Sow Good's state-of-the-art manufacturing facility. Each custom-built freeze dryer costs between $1 million and $1.5 million. So there is a high cost and a time factor for competitors to enter the freeze-dried candy market. Sow Good has a 1-year head start, which is a big first-mover advantage. Sow Good estimates that each proprietary freeze dryer can produce up to approximately $10 million of revenue per year, depending on product mix. Management has stated they are actively searching for additional packaging facilities and additional internal freeze dryers for further increased capacity. Leveraging co-manufacturers located in China and Colombia allows Sow Good the flexibility to fulfill high demand for its most popular products while also freeing up its internal capacity to manufacture more difficult products in large quantities, allowing for a more diverse SKU portfolio at scale. There are a few players that have the ability to manufacture and deliver freeze-dried products at scale and at an attractive price point to big box retailers. Sow Good spent over 2 years and over $10 million to develop a state-of-the-art manufacturing facility and freeze-drying equipment calibrated specifically for its products prior to the commercial launch of its freeze-dried treats. Management believes the technical knowledge and expertise required to build a freeze dryer facility matching Sow Good's current capacity poses a substantial barrier to entry for competitors in the confectionery space. Another highlight is that Sow Good's primary manufacturing facility located in Irving, Texas, is a Safe Quality Food certified facility with a 97 score on its most recent food safety audit, which exemplifies Sow Good's commitment to maintaining the highest standards in food safety, pathogen prevention, and allergen protocols. Sow Good is a small cap growth stock trading below $200 million in market cap. Incredibly, the company launched its candy in March of 2023 and in a matter of 9 months just surpassed $9.5 million in revenue in Q4 of 2023. The company turned profitable in Q3 of 2023 with revenue of $5 million, and I expect the company to generate positive free cash flow from here on out, excluding future capital expenditures for additional freeze dryers. So what is freeze-dried candy, you might ask? If you're enjoying this video so far, make sure to click that like button to support the channel. It helps a lot. So freeze drying removes moisture from the product, adding a crunch perfect for snackability and concentrating the flavor while extending the shelf life by years. Sow Good offers a diverse portfolio of sweet treats across multiple form factors, which include 14 different SKUs of candy and 4 SKUs of ice cream. Sow Good's decision to enter the freeze-dried candy category came as a result of freeze-dried candy videos going viral on social media platforms, particularly TikTok. The hashtag freeze-dried candy has amassed over 2 billion views and continues to be a viral topic on the video platform. Video reviews of Sow Good's products that are organically generated by TikTok users have amassed over 4.5 million views as of December 31st, 2023. The consistent and growing interest in freeze-dried candy supports Sow Good's belief that freeze-dried candy is developing into an everyday, must-have category for retailers. The big question for a lot of investors is this new freeze-dried candy category sustainable, or is it a fad? Let me know in the comments what you think. Is freeze-dried candy just a fad, or will it be a new candy category for years to come? The management team and founders have 20 plus years of combined expertise in the freeze-drying process and design experience. They also have plenty of skin in the game when it comes to having a sizable ownership stake in the company. Sow Good's growth strategy is based on 6 primary elements. Number 1, increasing production capacity. Number 2, deepening existing customer relationships. Number 3, new customer expansion. Number 4, expanding on different product offerings. Number 5, driving margin expansion. And number 6, vertically integrating their operations. Sow Good recently announced a proposed public offering of common stock to raise $15 million and to be uplisted to the NASDAQ. This should help raise the trading volume in the stock. Also, this IPO should be sufficient enough to fund Sow Good's capacity goals of increasing additional freeze dryers in 2024 and 2025. Keep in mind, one additional in-house dryer produces up to $10 million per year in sales, depending on product mix. More freeze dryers equals more revenue opportunity. In regard to the stock price, I plan on building up my stock position in Sow Good if the stock continues to sell off. I currently have my cheapest blocks of shares around $16. Sow Good could end up being my biggest holding in the portfolio if the stock sells off closer to the $10 range. As always, let's end with a portfolio update. My biggest holding is Shift4 Payments, which has sold off from the highs of around $92. Acquisition talks have halted, which resulted in the slide downward. If the stock trades below $55, I might add to my position. My next holding is Penn Entertainment stock. There's been rumblings that the interactive segment, aka ESPN Bet, is lacking in its same game parlay offering. Plus, its Q1 revenues may have taken a hit from larger than expected sign-up bonuses. I'm not too worried. Unless I see a major decrease in monthly active users, I will continue to hold the stock since a lot of analysts are forgetting about Penn's cash flowing properties. And for this reason, I'm very interested to see Q1 2024 earnings results. Other than a sizable cash position, my last holding is FitLife Brands stock. FitLife Brands had a nice increase in pro forma net income last year, and I expect its new acquisition in MusclePharm to lead revenue growth in 2024 and beyond. It's nice to see MusclePharm's online sales have already seen a steady increase from January to February and February to March. The stock has ran up before I could increase my position, but that's okay. FitLife Brands will be a hold for now as the quarters tick forward. Overall, I hope you enjoyed this episode. Let's end it there. Play the music. If you made it this far into the episode, then make sure to subscribe and click that like button to support the channel. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from zero to infinity. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. If you have a question that you'd like me to feature in a future episode, feel free to email Mr. Zero to Infinity questions mrzero@gmail.com or hit me up on Instagram at Mr.0 to Infinity. Thanks again for watching. Let's keep building from 0 to infinity. You got this. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember that all my episodes are for informational purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I am only sharing my personal ideas, opinions, and just one of my stock portfolios. You should never take any of this information as guidance for buying or selling any type of investment or security. There are financial risks associated with investing. Peace.